Hello, this is Joe Pryor with the virtualrealestateteam.com in Oklahoma City, a part of Redbud Realty and Associates. It's Monday the 6th, and I just got back from Orlando, Florida, where I attended a very large conference of realtors that specialize in real estate short sales, but also some in investment real estate. In fact, that's a movement within this group, is to get the expertise for investment real estate. I was privileged to be one of the main speakers on a panel talking about investment real estate to the group. And I want to kind of go over one of the things that I covered, but in a little bit more detail on this video, about why you should be investing in real estate right now. Now, I'm not an all your eggs in one basket sort of guy. I don't believe that everything that you do ought to be in real estate, just like I don't think everything you ought to be doing is in the stock market, for that matter. But I think real estate right now is an incredible buy. The bubble is gone. Prices are depressed in some areas even more than they should be. But it is the time that people ought to be buying investment real estate if they do, because buy low, sell high. But what I want to do is talk about, I think, one of the important reasons that I think Americans right now are investing in real estate. And that question is trust. Who do you trust? Who do you trust with your money? What is a verifiable value on anything at this point? Do we trust Wall Street? No, I don't. They cynically packaged real estate into derivatives, told people what a great buy it was. On the other end, they knew that it was toxic, and at the same time, they were selling it off or shorting it, making money on both sides. What about the accounting firms? Do we trust them? No, they've been fined heavily because, well, basically it was BS in terms of what these companies were doing and what these derivatives were worth. Do we trust the government to regulate these people? Well, they weren't regulated then, and guess what? They've done very little, if nothing, to regulate them now. And so, do we trust Wall Street? Well, let's talk about who else we may not trust when we talk about the government. And I'm not saying this is absolutely true, but if you're 30 or 35 years old, do you really think Social Security is going to be there for you when you're 65 or 70 or 75? Whatever the retirement age is going to be, I don't know, maybe 80 at that time. You may be living longer. But it may not even be there for you in terms of how you're thinking about it. Even someone like me that can get Social Security and probably will get all of it, it's not something I can live on, folks. I need more than that. Do we trust mutual funds? Well, no, we've seen where they've taken money under the table and put people into rather risky investments, and in some cases there was 40% drops in that. So we're a little hesitant on that also. Well, how about those big banks? Are they loaning money? Are they creating business? Or did they just borrow from the United States government and are now at giving record dividends out? So, you know, I don't know. I don't know who we trust at this point. I don't know how to verify when an IPO comes in on something in Wall Street as to what it's really worth. But one thing I do know is I can value real estate. I can look at a real estate property, and I know that, number one, it's really tangible. It's not based on 8 times earnings, 10 times earnings, or 12 times earnings. I know it was built a certain year. I know that it's bricks and mortar. I know it has a particular size. Now, beyond that, I know there's 3 different ways I can assess value and get a really accurate read on what I think that property is worth. Number one is the one we're all familiar about, which is the comparable approach. With a comparable approach, we look at things that have sold in the last 90 days to 6 months, and we say, based on this history, we know it's worth a particular amount of money. Then there's the cost approach. So let's say you're buying some cheap condo in Florida that used to be $280,000 and you're buying it $50,000. There's a cost approach that says, how much does it cost to build this thing? Well, that may be $150,000 from scratch, and that's the cost approach. So you can say, well, you know, if I buy this at 50, there's no way anybody could build it for that. That's not a bad value. And then finally, there's the economic approach. The economic approach is based on what do things rent for in that particular area. If I know I can buy something at $100,000 and it rents for $1,500, I can make a pretty good argument for at least $150,000 value based on the economic approach. So I can use 3 different ways of saying, what is that property's value, and get a pretty darn accurate feel for that. Now, I know we can't predict the future. We don't know if that property is going to go up or down at this point, but we can quantify cash flow. We can look at it and say, okay, here's the historical data for the last year, the last 2 years, about what rents in these markets. This is how long they typically stay on the market. In our market right now, we have a 1% vacancy rate, and things last a week. Our rentals are incredible. Your market may be a month or 2 months. I don't know, but that's the one thing that you can evaluate that. I can get $1,500 and rent it in a week, and I can have a 1 to 5% vacancy rate. So all these things can be quantified, and that's the advantage of real estate. And, you know, when we're looking at something that happened recently, like Jimmy Choo's shoes, which started at $600, was just valued at $812 million on a purchase. It was bought out for that amount of money. Do we really understand that? Is there really that kind of a value in there? Or do we feel a little bit more confident upon that value that we can put in that real estate investment? And does that relate to our personal lives a little bit more than $6,000 to $1,000 pairs of shoes and $812 million? But finally, I want to leave you with this. Control. When you give your money to Wall Street, when you give your money to a mutual fund, any of these people, do you lose control? Do you have any way that you know that those people are going to treat you with ethics, with value? And that is a real question. And I am thinking that a lot of us are looking at this world as a little bit out of control, and we would like a little piece of serenity, a little piece of stability in our lives. And that's where I think real estate really comes in. This is something that you have control over. Now, I promise you one thing. If you deal with a competent real estate investor, they can give you the numbers, but also they have the turnkey operation. If you invest in Oklahoma City, I have everything for you. All the way from the person that's going to give you the loan back to the final person who's critical in our component, which is the property manager, because they're the ones that are going to make this passive income for you. So, if you want a value that you can trust, if you want a value that you can verify and understand, even if you're not somebody that took economics or business in college, if you want something that you personally have control over, my suggestion, look at investing in real estate, find the competent person that can take care of you. We can do this for you in Oklahoma City. And if you need a recommendation for some other part of the country, I know a lot of people. My name is Joe Pryor with the virtualrealestateteam.com, where we deliver traditional real estate values with the speed of technology.